Alrighty, everyone. So we have the fortunate privilege of sitting down with my good friend Ivan from Ivan on Tech. I've gotten to know Ivan over the last few years in the cryptocurrency space, and we just actually recently wrapped up part one of our discussion on kind of the craze around DeFi right now. I think Ivan and I have been covering the space for a while. I've been seeing the craziness back from when yield farming really started back in early June, and we get to talk about Digifox and also the broader cryptocurrency space. So if you guys want to, please go check out Ivan's channel. Not only check out the video there, you can see part one, but also consider subscribing. But all in all, Ivan, thank you, man, for making the time. It was a great conversation so far and everything, and I'm excited to continue it.
Good to be here on your channel, Nick. And thank you for inviting.
Absolutely, man. Yeah, a pleasure. Anytime. So I wanted to, I guess, kind of continue from our conversations. We talked about a lot of the good side, I think, of DeFi, and a lot of the progressing technology that's being built that's abstracting centralized institutions. And, again, kind of making what seemed like a fairy tale a while ago actually a reality now, as we're starting to see exchanges kind of cave into DeFi. So I want to ask you, in this case, Ivan, I've had a hard time kind of explaining to some people why yield farming, as lucrative as it is, and as things tend to be too good to be true, it tends to be that in DeFi, a lot of people don't ask where these yields are coming from and, why they are very high risk. So I wanted to see, maybe could you explain a little bit about what yield farming is? And then I think we can both kind of dive into why it's something that's in the long term going to be high risk for a lot of people, especially with higher yields.
For sure. So yield farming has been the hype the past few weeks, and it's insane how fast this industry moves, because nobody was really talking about yield farming in June. And then in June, we did see Compound Protocol launch, and the Comp token being the first major token that people farmed. What does it mean? It means that the Compound Protocol rewarded people that use the protocol with Comp token. So you use the protocol, you get Comp token. And this Comp token started to go up in value a lot, which meant that you could take out a loan, you could make a loan, you can just, whatever you're doing in the Compound Protocol, you would be rewarded with the Comp token. And because Comp token was mooning, you basically were incentivized to just use the protocol. So you basically provide liquidity, or you take out a loan. You do all different features in the protocol just to farm the Comp token. So that is how it started. And really, the idea is nice. The fact that you can reward people for using your protocol. Unfortunately, as always in crypto, we take it to a whole other level. And now we have completely perverted it with sushis and with all of these food memes. Because right now, what we've seen is just an amazing printing of money, amazing printing of cryptocurrency in this space. This is where yield farming is coming from. You use a protocol, you get rewarded in their token. As long as that token goes up in value, it is, of course, a nice yield for everyone involved. But somebody has to buy the token at the end of the day. And the question is, will you be the bag holder that buys the token that everyone is farming? So that's why my general rule of thumb is to never buy the farmed tokens. You can farm them, but buying them simply doesn't make sense. Now, in some cases, like we saw, for example, with Wi-Fi, Y-Earn, the token is actually very valuable because the protocol is so big and it's not farmed anymore. It was only farmed during the first few days, during the first week. So when a token is already fully farmed and it has a nice utility, for example, if it's governance token in a big protocol, it does make sense. That's why Wi-Fi is worth so much. But what we've seen with Sushi and other tokens is a lot of money printing. Many people FOMO in because they see huge APYs. And by the way, these APYs, they change daily. So if you see 1,000% APY today, tomorrow it might be 10% or 20 or 100 because the price of the tokens change all the time and your yield is coming from the newly printed tokens, reward tokens. And it has come to a point where we see a lot of these projects launch daily, at least until the Sushi drama unfolded just yesterday. Before that, we did see a daily project launch with a new token, a new farm that people went wild on. And it's very dangerous from the perspective that a lot of these projects are not audited. So you deposit your money into a project and who knows how the code is really built. And people just FOMO in the result of greed involved. But also, most importantly, many people buy these tokens. So many people buy Sushi, many people buy these tokens tokens because they think it's gonna moon. When in reality, obviously, they will moon until the hype dies off, which I hope it is doing right now. I do hope that the hype is dying off because, to be honest, I think that this yield farming space is giving a bad name to DeFi. And it's not really DeFi. I mean, what kind of DeFi is it? You just print tokens and you incentivize people to use your protocol, but in reality, there is no innovation. So like we saw with Sushi, the only thing they did was to copy Uniswap, and that's it, and added a reward token. So there's no innovation, and that's why I think long term is all gonna be about the team. Is the team actually credible? Like Uniswap versus Sushi, for example. In Uniswap, you do see people with years and years of experience. They have a lot of credibility in the space. They're building version 3 already. While in Sushi Swap, you had this anonymous guy. Now it is FTX that has taken over it. But you cannot really build a community with only rewards, with only giving people money. I saw a very nice comparison that yield farming and having this token incentives is like having a party at your house where you have free booze. So obviously a lot of people will come. Does it mean that they're your friends? No. The same thing with yield farming and incentive tokens. Yes, you have a nice incentive and your token goes to the roof. Many people will come. A lot of liquidity will be in your project. Will it stay long term? Not necessarily, because you don't have the innovation, you don't have the team and the vision to keep people long-term in your community. So my prediction is that Uniswap will still be the leader because they are the technical leaders and they are really the leaders in this space. I also want to ask you, because you obviously have a project in DeFi, how do you see all of this? Because if people get hurt, let's say that we see this craze continue and some of these big contracts get hacked, or many people FOMO into this new food meme and the price collapses and many people get burned and they feel that, okay, we were promised 100,000% in yield per year. Instead, all the money is gone because the contract was hacked or whatever. How do you see it? Because I don't want DeFi to get a bad name. My worst case scenario is that DeFi gets the name of ICOs, because ICOs also had a nice name in the beginning, and then this whole concept of ICOs became very dirty because many people lost money. I don't want the same thing to happen to DeFi. I want DeFi to be a good word even in the future. So how do you see it?
Yeah, I was going to say, Ivan, there's one other threat in that case, not just the smart contract being hacked, but as you were mentioning, you don't want to be left being the bag holder, especially when the founder sells all of their tokens. So that actually is what happened with Sushi in this case. So, I mean, putting that aside in this case, right? I mean, this is kind of crazy stuff we've already seen in crypto over the last few decades, or sorry, last decade in this case for crypto. It feels like decades sometimes. But I think you're right, Evan. I think for me personally, it's the reason why, as a CEO of a wallet that plugs into a lot of these services, I trust Compound. I trust, as well as other lending providers that we're looking at, like Uniswap, Celsius. I trust all these providers from centralized to DeFi because they're reputable companies that did things by the books, and they are pushing the boundaries for innovation. The problem is, again, Sushi Swap kind of basically painted a very pretty picture of itself as being a great incentive mechanism for DeFi, when in reality, if you just spend the time to kind of, as you mentioned, abstract what it is, it's money printing. And it's this idea, I mean, if you want to call it a Ponzi, whatever, at the end of the day, there's no way you're going to make yields that pay 10,000%, 100,000% APY. There's no way in the world, because there's no borrower who's really willing to pay that much, right? So basically, this was just kind of as we've seen before, I even compare it more to staking in the cryptocurrency space. When you stake tokens, someone they'll give you 10,000% returns on tokens, 100x from what you used to have. When in reality, people don't account that this inflation starts to weigh down the price when the hype stops coming in. You need buyer liquidity to keep the price going higher. So there's no innovation here at all. It was just a short-term incentive mechanism. And ever since Sushi Swap has declined, you've started to see about half of the liquidity that came in. We almost topped near around 2 billion in Uniswap, now down to around, last time I checked, around 1.5 billion from much more conservative levels, around 1 billion earlier. So yeah, again, I don't know. I'm very interested to see how it goes long-term, Ivan, but I'll be honest, I don't think there's a long-term story to it. I think what's going to be much more stable in the long term, and it's the reason we never integrated Sushi Swap, is simply put, the nice solid yields you can get that are fixed around anywhere from the low 2 or 3% range sometimes, if there's not much demand on the decentralized protocols for like Compound and Aave, to around 10 to 11% on stable coins. So I think that's really the long-term game in that case. And yield farming, just like any other fad that's too good to be true, will end to be too good to be true.
And it's like you say, nobody is borrowing that money. Usually when we speak about yield, it's basically people giving money to the protocol, some people taking that money as loans in lending. But here is just that you lock up your funds, you contribute with liquidity to the protocol, and then you get the reward token that is being printed. So nobody is going to borrow that. Potentially somebody is going to buy it from you for more than you, but you got it for free. But somebody's going to buy it from you because they think it's going to go up. And that's the only real yield. Now,
Yeah.
I am looking. I was gonna switch the topic a bit, but if you have more on DeFi, please.
No. The only thing I was going to say there, Ivan, I think too that people have to consider is they say, well, the Sushi Swap token is a governance token, or it's going to do this or that.
yeah.
And it's like we have to be honest. At the end of the day, we have to question again if Compound or all these protocols, their tokens are actually going to be worth something long term. This is very early on, and to think that Sushi Swap is going to do anything, yeah, I don't know. But, yeah,
but it's when you have an issue motivating why you have a token, you just say it's a governance token. It's gonna be used for governance. Sometime in the future, guys, you can make decisions. But to be honest, I feel that governance tokens, they are a legit use case. I mean, we see, for example, with Wi-Fi, that governance token is quite strong. As long as the actual protocol is mass adopted within crypto, you can make quite big decisions. So, for example, what we saw with Wi-Fi, they added the Ethereum vault, the fact that you could lock up Ethereum and then it could be used in yield farming. But it also created a lot of demand for ETH, because now you can use ETH in this very simple way to get yield from yield farming. So imagine if you could do it for any token. It's very powerful. So I think if a DeFi project, like for example Compound, is huge, and you have the governance token, and you can affect which assets they support, and obviously if they support an asset, it can be very bullish for the asset, because it can create a whole new wave of demand, because now it can be used for lending and for all of these new things. So I do feel that it's a very important use case, but it's just that everyone has now governance, and who will participate in the governance? Maybe one person can participate in 2-3 protocols maximum, and in reality it's always the speculation that somebody will buy it from you in the future. So governance is just an excuse for most projects. But if it actually becomes big, if a project becomes big, then it's 100% powerful token that you can get. Now, Nick, I want to switch the topic a bit. I'm looking at the Bitcoin chart as we speak. We're trending towards $10,000, and it seems that we're gonna go below. Let's see. And we have this very important gap at 9.5 approximately. Some people believe in gaps, some people don't. We also have this downward trending trend line from the 2018 all the way back. So it's approximately also at 9.5, where we could have some support. How do you see the current Bitcoin and ETH market? What is happening?
Yeah, I think that's a good point. Yeah, just to take a broader look at the market. For me personally, Ivan, I think that this ballpark range of 9,500 is possible, because what we might be seeing is something that happens similar to gold's. I'll be honest, I like to make calls when I'm wrong on things. I thought that we were going to hold on a certain line of support and resistance that I've talked about for some time, which is, I think the bottom was around 11,000 or 10,500. So we did break through that. However, in regards to the kind of range that we've seen right now in the pullback, something that I talked about in our newsletter group that I emphasized on the channel as well is that you don't want to catch yourself 2 steps behind, right? We obviously have had a pretty sharp correction for Ethereum. Ethereum went down back to basically closing out all of August's gains, basically down towards the price where it was at the end of July. And Bitcoin did even worse. It went down, I think, to where it was back in May of 2020. So a few months of price action just cut out in an instant. But the thing I emphasize, and what I mean by this point of don't find yourself 2 steps behind, is obviously you didn't sell the relative top in this case. If you're holding Bitcoin and you've taken this this short-term loss in the market, it's best not to find yourself 2 steps behind by selling and then seeing the price go up and having to buy back in at that higher price. That's something that I emphasize so many times, especially when we've already seen right now. And again, I don't have the official numbers. I know we were at 12,000. So if we're down at 10,000 in this case, we've seen about a 20% correction. In that case, you don't want to find yourself 2 steps behind and buying back in at a higher price. these kind of corrections tend to recover just as quick back up to the upside if we're learning anything from the 2017 cycle. So in that case, more than anything, I would look to average in at this portion. Me personally, it's not financial advice, but I'm basically been trying to figure out ways where I can get fiat into the market at this time and try to be able to make some purchases on ETH as well as some of the altcoins out there through Uniswap in the broader market.
And I think it all comes down to whether you believe that we are in a bull market or not. Because as I showed on my channel, it's very difficult to see that you are in a bull market. If you look at the past bull market, we went from $500 to 700, then we crashed to 600 again. So people were thinking, all right, so is this it? Was this the top? We go down now, and then we go from 600 to 900, and then we go back to 700. So you never actually feel that it's a bull market. Of course, when you zoom out and you see 2016 is basically a flat line, and it's so low on the chart, you don't even see the different tops and bottoms. It's just a flat line before the parabolic rise in 2017. But when you zoom in, you see that we did pump and then we dumped severely and pumped and dumped. So it's very difficult to feel that, okay, we are in a bull market. But in reality, maybe in 2-3 years, when we look back at 2020, it will just be a flat line on the chart as well. That is, 10, 12, 15,000, it doesn't matter. It's so small on the chart, you cannot even see it. So what kind of view do you have on the macro picture? Because while Bitcoin has been quite bullish, we also have uncertainty in the traditional markets. We see new waves of lockdown across the world. So if the traditional markets fall, there is a good chance that Bitcoin also falls quite significantly in my mind, because we haven't confirmed the decoupling yet. And we're still quite coupled to the stock market, in my view. So how do you see the situation unfolding long term? Are we right now in a bull market, or do you feel that there is a big uncertainty still?
Ivan, I think you kind of hit the nail on the head in that case with your general analysis. For me personally, I have the kind of broad range target that a lot of people have, whether you're looking at the stock to flow model or just looking for kind of the big even numbers. So I think that Bitcoin can easily, by the end of this cycle, reach 100K. But there's two things I want to bring up here in this case. It could go to 100K and maybe even far beyond that. But people need to have time frames in mind. So the first thing I want to emphasize is that I disagree with a lot of people who generally refer to like maybe a 4-year cycle in crypto. Because if we look at the BLX chart, which is the longest standing analysis of Bitcoin's price and volume aggregation across all the major exchanges going from players back to 2010, we've seen that each cycle in this case from peak to trough, in this case, so bottom to top, has basically been not only higher multiples in the initial cycles, but also shorter cycles. So over time, you have larger cycles, or basically, longer cycles in this case, that add around 11 to 13 weeks from bottom to top. But along with this as well, lower gains in this case. So that's why I tell people, for me personally, I don't think we're going to go to $1 million in this cycle. I don't think $500,000 is in the cards. I think, a very moderate level in this case of going from, the bottom at 3,000 that we had back in December of 2018 to 100K makes perfect sense. It's much lower than what we had last time, which was 100x from 200 to 20,000. So keeping that in mind, if we're adding another 11 to 13, it's not weeks, it's months in this case that we add to each cycle, that would give us a top range of around November and December of 2022. So almost stepping into the beginning of 2023. So that's the point I always bring up to people, is just to keep your time horizons as conservative and therefore long-term as possible. And then to the point you brought up, Ivan, again as well, Bitcoin could very well be dragged down and have a longer time getting past its previous highs if we start to have a drag down in equities. We just had the worst week of price action since back in June. So it might be that equities might be seeing a short-term top. But the key point I drive is that the make or break moment for Bitcoin will be when institutions get interested. And what do institutions need to see in order to get interested? In my opinion, we need to get above the all-time highs. I can give a perspective from myself. I really got interested in Bitcoin after hearing about it years ago in 2011. I finally bought some of my first Bitcoin and got really interested in the market in mid-2016 when we got back up to the all-time highs at 1,100 for Bitcoin. For me, that is a make or break moment where I say, okay, it's back to the all-time highs. But I mean, I'd like to hear from you, Ivan, in that case. Like, what do you think in that case? Do you think we'll be able to get to, that level of 20K sometime by the end of this year, or maybe in Q1? That's our general target, is Q1 of 2021.
I think it's very possible. Just imagine the world without Bitcoin, and to me, it's a horrible world where you cannot store your funds yourself. You can't. You need to have a bank. Even if you want to store your funds, how will you do it? It's insane that Bitcoin provides such a utility that you can have your millions, billions, whatever you want in a wallet in your brain. So when I just look at the use case, to me it's a no-brainer that we will go to 20k, 100k, maybe even 500k. Maybe it will take another cycle, as you say. Maybe it's not going to be in this cycle, but whenever in doubt, like for example, when we saw the Bitcoin price go to 3,000 and everyone was looking, okay, what's going to happen? Are we going to go down to 2K, to 1K? Some people are predicting, okay, now hyperwave is kicking in, so we're going to go to 1K and below. But it's just, imagine the world without Bitcoin. And you see that all of this volatility is only short term because the use case is so amazing. You can store your wealth yourself. I mean, it sounds like a very simple thing, but it's a very valuable thing. You don't need any institution. You don't need to beg someone to open a bank account for you. You don't need to explain to everyone what you're doing with your money, why you're doing it. So short term, obviously everything is possible. Could we go down to 3K like we did in March? Possible. Well, it's not impossible, but we already did that already this year. So for that to happen twice, I find it a bit unlikely. Could it happen? Absolutely. Because we haven't even seen what the stock market is going to do. So that's my only concern. It is the stock market and the fact that we still have not decoupled. And when I look at the chart, it could absolutely be that we go down to 5K even. It could happen. I mean, it's Bitcoin. Anything is possible. But we already did it this year. So I'm not sure it's going to happen 2 times in the same year that we see this terrible terrible crash. I'm more looking at 9.5 because that is where the trend line is. When you draw the trend line from the peak in 2017 and then you see another peak last summer in 2019, and basically we broke through that trend line and now probably it's going to be support. So that's what I'm looking at. But this is the thing, we're so early. There is no guarantee for anything. And I'm just trying to see the world without Bitcoin, and to me it's very clear that we cannot stay at $10,000 for long at this range because it's so small. The market cap is 186 billion. It's nothing. There are companies in the world that are bigger than this. I mean, is Bitcoin more important than social media? Of course it is, but social media right now is worth 10 times as much. I know Facebook is approximately 8 times. Apple is more. Amazon is more. Is Bitcoin more important than Apple with all of the iOS Mac devices and cloud? I think yes, it's more important, but it's a lot cheaper right now, and therefore it is quite strange to me that we're still in this very low valuations. I feel that Bitcoin is heavily undervalued. ETH is heavily undervalued. This whole space is heavily undervalued, and maybe it is because I've been here for so long that you truly see the value and potential, and most people simply don't understand it yet. But I just feel that we're so early, and it feels like a no-brainer that this industry will be huge. But in the short term, because most, as you say, it's all about institutions. Most institutions still see this as some kind of a game market. You know, it's not serious for them. Some kind of toy. Yes, Paul Tudor Jones believes in this as not a toy. We have a few other people that also come from institutional background. They also see the value in this, but 99.99% still see this as some kind of speculative toy. So I'm afraid that if we see a stock market collapse, they will see this as a very, very risk-on asset and not as a safe haven. Long term, I think we will decouple from stock market, but short term, I'm not too certain. So that's why short term, anything could happen. Could we go back to 5K? Yes, we could. It's Bitcoin. Look, anything can happen. So that's why risk management is so important, and money management, because you need to be prepared for anything. We go down to 3K, you should be okay. We go down to 5K, you should be okay. We go up to 20K, you should also be okay, and not feeling bad, because let's remember, you don't only feel bad when the price goes up. Many people also feel bad when the price when the price goes down. Many people also feel bad when the price goes up because they feel that they have missed the boat. But in reality, with this kind of risk and volatility, you should never feel that you've missed the boat, because if you have some Bitcoin, you probably made the right decision to risk manage it. Because if you are all in at this level and we go down to 7K, 6K again, you would be feeling terrible. and many people leave the industry forever. Instead, it's better to manage risk better. Yes, you will not be all in when we go to all-time high, but also you will not be losing 40-50% of your portfolio when we go down. So risk management, money management is important, and unfortunately, people don't care in this industry. I know I'm saying it on my channel all the time. Risk management. I mean, who cares? Look, people just go in all in sushi, all in all of these different DeFi coins. So it's interesting to see. Maybe you guys can write in the comments, all of you who are watching, who of you actually take this seriously, because I'm afraid most people don't care about this kind of, money is for other people. For me, I don't need it. I know a bit better, so I don't need money management. Unfortunately, that's how most people think in my mind. So do you agree with that?
Yeah, Ivan, you made a lot of points. I agree to that point about risk management. The first ever stock trade I made when I think it was years back and stuff, right when I can open up my own brokerage account. I made a trade in 2 different companies. One was a Chinese solar company that was profitable, that had good earnings, and the chart looked nice. And then the other one was the other half of my cash that I put into investments was a medical marijuana penny stock. So I learned very quickly that penny stock's probably too high risk. And it was basically, well, it was nice. I was very lucky. I made enough gains on the other stock trade to alleviate the losses. So I was break even. And it taught me a very important lesson that, you know what, I need to learn from what worked right and what didn't. And some people are going to have to get burned. It happens in traditional markets and equities, and it's going to definitely happen in an early market like crypto. But I think you hit on one point, Ivan. I think that's a great closing point, is that through all of this volatility, people, I think, need to understand that this is an emerging asset class, to focus on this, the scale and size of Bitcoin. A lot of people think, God, Bitcoin at a, X price sounds really high, maybe at like even 10,000, it sounds like too much. And then also if you hear about the market cap, you're like, oh my God, Bitcoin is worth more than the net worth of maybe, Jeff Bezos or someone, right? But the problem that I think a lot of people have perspective on, even comparing it to companies and stuff, is, as you mentioned, Ivan, like how important it is to have censorship resistant wealth that is not under the kind of guise of a central bank. To just kind of put that into perspective, in an age and generation where people are looking to park their capital anywhere that's not simply sitting in currency, in this case, putting their currency and trading it for something else, it's a very clear sign that right now, more than ever, central banks print crazy amounts of money. And as rates go negative, so you're being penalized for holding dollars or one of the largest assets in the world, US treasuries or other government bonds, you are going to be putting it somewhere else where you're not expecting a yield, but you're expecting that you're not going to be printed into oblivion, and it's also not going to be penalizing you for owning it. And I think in that case, it's very clear that outside of golds and maybe silver, Bitcoin is the only asset that's going to do that for a younger millennial generation. And that's the next wealth cycle in this case. That's where we're going to see this transition of wealth over the next decade or so. So I think, again, even just having that 1 to 3% portfolio allocation is always something to consider as well. But I think above all, man, like you said, it's best to just ignore the short-term movements in this market. Just to provide comfort to people, I very rarely day trade. More than anything, it's a fun thing I do, if I find a short-term opportunity. But in most cases, I'm holding throughout the entire cycle. This whole cycle, for example, as we pulled back, I've never moved out of my crypto positions. So I haven't had a net decline in my crypto positions. The only thing is the dollar amount in that case. But I've been holding, and I basically as well have been trading in and out of opportunities and stuff that we do, on the channel, or we report in the newsletter that we have. So it's been really fun overall, and I'm very excited to see things continue to grow for this space.
I just want to highlight one thing that you mentioned. Yes, a lot has to do with central banks, and this is an asset that is not inflatable and so on and so forth. That's big. But what else is big is that many people move countries. It's more common than ever that you work in different countries. You have business here, business there, and the banks are slowing you down. Imagine paying someone in South America or in Southeast Asia. I mean, just that transaction, you don't know where it is. And maybe it will get rejected by the receiving bank. Maybe something is wrong, and it takes days, it takes weeks. The fees are unknown. And this is how the traditional financial ecosystem is built. With crypto, you always know it's gonna arrive. Yes, sometimes it's higher fees, sometimes it's lower fees, but is it in the blockchain? It's in the blockchain. It has arrived. There are no questions. If you want to take your wealth from one country to another, you only have to follow the legal system. You don't have to follow the bank regulation. Because look, if I have all my funds that I want to move them, and it's according to the law, I also need to explain to these bank guys, so they actually release the funds and they let them go, and they don't ask me for weeks why am I doing the transfer. Look, I'm following the law. I'm good. So just that is so huge, and more and more people are realizing that. And then of course suddenly your account can be frozen because now your business is a bit too successful. So they didn't expect that you would be making so much money, so they freeze your bank account until you explain what you do in your business. Then they maybe will unlock it. And it's so funny because we've been speaking about this with my partner sometimes, that sometimes you're like, hey, we're afraid to be too successful because then they're gonna ask like, okay, what is this? Explain everything. So you understand that it's the biggest thing is just having, for me at least, yes, central bank printing, that's huge, but also you can protect it with stocks and other ways. If that's your main concern, central bank printing, there are many different ways to protect yourself, even without crypto. But crypto just makes it global, and it allows more people to participate in this protection against inflation. But for everyone in the world, it is the fact that you can own your own assets and you actually own them yourself. You can transfer them anytime, on Sunday, on Saturday, in the middle of the night, to whoever you want. To me, that's the biggest thing. And then, yes, it is an asset class. That's probably where most of the capital is going to come from, because it's trillions and trillions coming to this asset class. But my most favorite use case is your own money. That's amazing. Without anyone in between. And look, another thing is just, let's say that you like a jurisdiction. So, for example, Roger Ver, he is based in St. Kitts. As I understand, they don't have a lot of banking relationships because the international banking community basically says, hey, you have too relaxed regulation, you have too relaxed financial regulation, so we cannot let you into the global banking community. But look, with crypto, if you like that jurisdiction, you can set up business there because you don't need a bank. You can receive payments with crypto. So just this freedom that, hey, you do whatever you want. If you don't have a bank account, you can still do worldwide digital business. It's amazing. Yeah, I'm amazed.
Yeah, man. I think, what I'm very interested in this case, Ivan, is like not only with Bitcoin in this case, but you can see that kind of censorship resistance being brought about with crypto stable coins. You're seeing it with Ether as well, with DeFi applications. It is going to be incredible, I think, over the next few years. And I think more than anything, that's why, again, I really like what we're doing with Digifox, is just being able to build an interface in this case where people can interact with these systems and make global payments. I can send you USDC right now, and I'm not dealing with the bank. I don't have to hope that their systems are up or that they're going to not freeze my funds. I can just give you cash like I used to be able to do. I mean, I can still do it in today's world, but no one transacts in cash. It's not convenient. And also, it'd be very difficult for me to mail cash to you. So
yes.
It's something where it's basically, in this case, I think it's a very beautiful system where, for everyday people and stuff, we're going to have less fees, less hassle. And we're going to for the first time in a very long period of time, have freedom with our money. And I think that's a very beautiful thing. I think you put it in a very good context, because I think we always, as someone like myself, I'm very macro, so I always view like inflows of capital and seeing Bitcoin as a new asset. When in reality, you bring up a good point, Ivan. It might be that, as we've kind of been pushing off responsibility for a lot of things in our life, we might realize that working 9 to 5 for something, we might want to protect it as much as possible.
Exactly.
Yeah.
Perfect. Well, man, thanks a lot.
Yeah, I mean, Ivan, seriously, this has been like a great conversation, man. It's just been great to hear your perspective on things, and good to catch up as well, man. It's been a while.
Yes, always a pleasure. Thanks a lot for inviting me, Nick. And we'll be in touch. I'm looking forward to more discussions in the future.
Absolutely, man. And one last thing I wanted to mention as well, for those of you who are listening in, feel free to check out Ivan's channel if you don't already. I'll put a link down below in the description. But hopefully, man, we can do more conversations like this, and I'm wishing you all the best.